That's on the GST compensation issue. Now we're in earnings season of the second quarter, and the big numbers that are expected are from HDFC Bank. The second quarter report card is expected. Analysts are seeing strong credit growth this time and a robust set of numbers overall. The net profit could possibly grow up to 17% if you look at it on a year-on-year basis, and the asset quality this time it's expected that it will weaken a bit sequentially, but let's find out more from my colleague joining us from our research team. Varun has the details. Varun, what can we expect from HDFC Bank this time?
Arguably the best private bank in the nation will be announcing its results tomorrow on a Saturday, as they always do. Now it's going to be an interesting number because we already know so much from the recent update they just put out, right? So we know that advances are growing at 16%. We know deposits are growing at 20%. As a result of that, your CASA is holding up very fine. We also know they bought some small loans from HDFC Limited. So it's not surprising that their credit, their ability to grow credit is continuing, because they also have one of the strongest deposit franchises. And essentially, if no money is coming in, no money can go out. And HDFC Bank didn't really conduct any equity raise. So they're relying purely on their internal accruals to grow. With all that being said, NII should maintain its upward trajectory, coming in at near 16,000 crore. There might be a slight pressure on profitability this quarter. According to brokers, they're thinking 12,560 crore pre-provision, which is slightly less than what we saw last quarter. And then post-provision, they're thinking around 6,500 crore versus also, again, slight tapering off of last quarter's number. So there are brokers like Nomura, let me just flag that off, which do have more bullish targets. They have PAT of above 7,000, PPP above 13,000, and NII above 16,000. So we'll see where it eventually ends up, but these were the consensus figures I just gave you. Key things to look out for is just going to be the outlook on margins, the credit cost, if there's been any reversal of entries because of the SC judgment, and any restructuring that needs to happen to the pool based on the customers that were opting for moratorium or not. Everything else is expected to be pretty much stable state at HDFC. We'll also be looking out for the provision figure this quarter. They have been elevated lately. Given that we do have a lot of macroeconomic uncertainty, perhaps that trend will continue into Q2.